The debt cycle in 2008 really was the kind of end of the financial system. It was the point that we all knew was coming, which is like, you can't have this much leverage. Look at what's happening. We're decentralizing power. So now people can have the source of power at their houses. So therefore, you don't need the huge storage. People say, well, you can't scale solar. Well, you can at a house level. You can do it probably at a village level. Nature's going to trade at a huge premium in a world of robots and AI, when you can just kind of leave that all behind. If you ask a young kid now and say, what do you want to be when you grow up? They will say, I want to be an influencer. And we think, are you crazy? But what is an influencer apart from a community leader where they have a community of people? It's actually, maybe they're being adaptive already. They've done it in Fortnite. They've done it in the gaming world as well. But in the end, people want the human-to-human experience.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Raoul Pal, CEO and co-founder of the global macro investor and Real Vision Group, accurately predicted the 2008 financial crisis. We explore the key differences between the 2000 and 2008 crashes, the importance of decentralizing power, the role of AI, and the need for fostering genuine human connections through communities in a rapidly changing world.
Weird about the everything code, and I'll explain what it is. What's weird is it makes everything so simple.
Too simple.
That most people think, well, this can't be possible.
Yeah.
We kind of knew it in Bitcoin world because we could see a cycle forming, and we've been following this cycle kind of dumbly, like, well, it's kind of maybe just the halving cycle. We don't really know. And then I started digging in and realized that the business cycle was perfect. So the business cycle, I used the ISM survey, and it was a perfect cycle. I'm like, that's weird, because if you remember, go back prior to 2008, we'd have these long periods of no recessions, short periods, and it was variable. But suddenly it's like a metronome, as you say. I'm like, what's that all about? And eventually it led me to realize that 2008, I think, was the Great Reset. The one that people keep expecting happened. What they did is they basically they told everybody they could forego paying interest on all their debts, which was zero interest rates. And then they tried the new trick of printing money via quantitative easing. Now, what that did is allow every single major government in the world to refinance all of their debts on this 3 to 5 year sector. And so they all did it. And what it did was force the business cycle into this 4-year cycle. And then all the asset prices are all correlated. Whether it's tech, whether it's Bitcoin, whether it's the economy itself, it's all driven by the same cycle, which happens to be the presidential election cycle, which happens to be the Bitcoin halving cycle. It's all the same thing. And so when you understand that, it makes the game a lot easier. Now, this is not going to last forever, but for the period of time that we've got, it seems to be playing out perfectly. And you can break these cycles down to 4 phases, which I call the seasons. So we have, call it crypto or macro winter. Well, that was 2022. That was 2018. That was 2014. That is 4 years.
Bitcoin's price closed below its 200-day exponential moving average, EMA, for the second week in a row, but over the past 24 hours, it has rebounded above $60,000. Several charts indicate that long-term holders remain unfazed by the current price action. Is a bullish breakout possible after August? The Bitcoin price has closed below the 200-day EMA only 3 times in 2024. As the chart below shows, July 4 marked the first bearish close under the 200-day EMA. The BTC/USD pair reclaimed a position above the EMA in less than 10 days. This time around, the asset spent less than 24 hours before it was back above the indicator, confirming that bullish momentum is slowly picking up this week. Bitcoin investors can be divided into short-term holders, STAs, and long-term holders, LTAs. They have different trading strategies and time preferences. STAs are investors or traders engaging in day trading or scalping, focusing on quick returns during a relatively shorter period. Many of these are retail or low to medium net worth individuals or entities. On the other hand, LTAs consist of traders undertaking a long-term buy and hold strategy for at least 6 months. Many of these entities represent high net worth individuals or large organizations, particularly in the era of Bitcoin ETF. Recent data suggests that the LTA's realized market capitalization change recorded a positive net value of $3 billion, previously observed in December 2023. The Bitcoin realized cap is the cumulative sum of all realized profits minus realized losses. In other words, the aggregate value has flowed into the Bitcoin on-chain, minus capital flowing out via losses. Taha, a crypto analyst, highlighted the above change in realized market cap, stating, "Whilst STA increases selling, this indicates that LTH continued to accumulate while STA is being selling at a worse price."
The next part of that is spring, when nobody quite believes that something is changing, but prices start moving higher. Yeah, Bitcoin had a great year in 2023 against most people's expectations, because spring is the time the shoots come up. Then you start transitioning to summer, which is this year, which happens to be the election year, which is when really the debt starts getting refinanced and they have to start using liquidity to finance it because there's not enough GDP growth to pay for the interest on the debts. And so they keep rolling forwards these debts and they keep monetizing the interest payments, which is this debasement of currency that happens at about, on a globalized level, 8% a year. They're debasing currency. And then next year will be macro fall, and then eventually the cycle tops out and we repeat it again because it's based on the debt refi cycle.
Right.
That this debasement of currency of 8%, there's two ways of looking at it. You can say, rightly so, we're being robbed of our future wealth because your future self is getting poorer because you can afford less assets with your income, because income doesn't go up, the assets do because of the debasement. Or the other way is you can say, I'm paying an 8% put option fee on the entire system not breaking, because that's also what they're doing. Because
8%.
They need to refinance the debt. They need to not let asset prices go too far down. So we can talk about that, but it's another way of looking at it. And you're like, would you pay 8% a year to have the entire system not break? Maybe. So you keep adding debt just to pay the interest payments on the old debt. Now, why is that phenomena there? It's pretty straightforward when you understand it. The US government and all the major Western governments, plus Japan, plus a few others, are about 100% plus of GDP in debt. Now, let's say, theoretically, interest rates are 3%. Well, if GDP growth is at 3%, then all GDP growth goes to pay those interest payments. Okay, but the problem is the private sector is over 100% of GDP in debt as well, and it's got interest payments. So if they both have it, there's not enough GDP to cover it. So what they've essentially done is removed the government debt payments out by printing money. And that stops the whole system becoming illiquid. Because if you think about it, you talked about collateral. Collateral is the money pledged against a loan. If the collateral falls too fast or too far, then you break the covenant on the loan and it gets called on you. And that's the whole system. That's what happened in 2008. So the best thing to do is not let the collateral fall by debasing the currency, and optically it goes up. So it kind of stops the system imploding.
Yeah.
Bitcoin miners have been selling BTC through exchanges as their net flow decreased in the second quarter of 2024. However, the selling pressure has flattened out over the past 2 weeks as miners' reserves are beginning to show signs of a trend reversal toward accumulation. The chart shows that the miners' selling pressure decreased significantly in August, suggesting that BTC could stabilize at its current price range before next month. One of the key bullish arguments for Bitcoin has been that global liquidity, namely the global M2 money supply, is beginning to increase. Similar to global liquidity, the stablecoin supply ratio, or SSR, also indicates how much liquidity is available in terms of stablecoins that can be used to buy Bitcoin. SR is the total crypto market cap ratio to the aggregated market cap of all stablecoins. A decreasing ratio indicates that the supply of stablecoin is rising, while the market cap is lagging, which means more liquidity is available to buy assets. Currently, the SR ratio is down to early February 2024 levels, which means a lot of liquidity is available in the market, potentially triggering a rally soon. Julio Moreno, head of research at CryptoQuant, highlighted that the total stablecoin market cap has reached a new all-time high of $165 billion. He added, this implies higher liquidity in the crypto markets. After a disappointing weekly close, Bitcoin has witnessed a bullish revival with a 4.5% return over the past 2 days. BTC is attempting to breach above a descending broadening channel pattern, which can have bullish implications. However, Bitcoin faces strong resistance right above the pattern at $61,700. A confluence of 50-day and 100-day EMAs is also right around that price point, which indicates that it can continue to deny a bullish breakout. If Bitcoin can break above the collected resistance offered by the EMAs and $61,700, a bullish reversal will be confirmed if BTC crosses above $62,737. In September, this can result in a market signal called choche or change of character, a sign of trend reversals. Do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.